Good morning. It's Jeff Rapson here from Berkshire Hathaway Verani, and I'm with Felicia Saucier this morning from Movement Mortgage, and we're going to take advantage of her knowledge when it comes to HELOCs and HECMs. And Felicia is going to take a moment to explain exactly what those acronyms stand for. So Felicia, take it away.
Thank you, Jeff. It's a pleasure to be here this morning. So in retirement, we look at what the different options are so we can use the equity in our homes. So a HECM is a home equity conversion mortgage, and is for people that are 62 and older, and it gives them access to the equity of their home. It is non-repayable. You do need to make your insurance payment and your tax payments, but no mortgage payment for purchase.
So what would you say the advantage of the HECM are, the HECM versus the HELOC, the home equity loan? Could you maybe just highlight again what the advantages would be for a senior at 62 plus?
Sure. So the advantages of a HECM, again, it's a home equity conversion mortgage, is you do not pay a mortgage payment. You pay your taxes and insurance, but the equity in your home pays for the mortgage. There is also the potential for a line of credit that grows at the same rate as the interest payment. So you would have additional funds available if you wanted to make a big purchase or take your family on vacation. And that money is also non-taxable.
And what would you say the advantages of the HELOC are if it probably has more to do with the age of the homeowner at this point in time, right?
Correct. So with a HELOC, it's a home equity line of credit. Anybody can take that out. There's no age restriction, but that does require a monthly mortgage payment to pay it back. Another disadvantage that I would say is that the bank can close that account at their will, and interest rates are adjustable, and so that would potentially increase your monthly output, and you may not have the funds to make that additional increase payment.
Yeah, we have a home equity loan, and we leveraged it most recently just to do a bathroom upgrade. So they're handy to have, but at my age, you might also want to consider taking money out. And I think typically what I've seen amongst my clients is they're much older, probably thinking in their late 70s, early 80s, that they want an extra bit of cash monthly. So that seems to be the key advantage, right, for older folks?
It really is. And the conversation to have is to actually start it when you're thinking about retirement, a few years, up to 5, I would say, before you turn 62, because it's part of a strategy. So for myself, we're going to get a HECM, not because we need the income, but we want to have it growing. So if we do need it, if we need to put in wheelchair access, or we need to revamp the first floor and bring up a washer and dryer, something big construction costs, we have those funds available without taking out a loan.
Yep, that's a smart strategy. In fact, my wife and I built a trust, and just last year when we were speaking with Brendan Well from Curtin Law, we got into some of these important issues as you age into your home, and if you want to stay there, this is a great strategy, I think. And my wife and I are going to probably leverage the same thing. So it's in the future, and planning is great. So I think I appreciate you coming today, and Movement Mortgage is where Felicia hangs her hat. Maybe you could just say where you can be found, a phone number?
Sure. So my cell phone is 603-325-5720.